Before you begin watching the Predicting Price series, I highly suggest you to first watch the model series and the trade breakdowns released. The reason why is because during this lecture series, I am speaking to someone who has already gone through those lectures, and therefore I anticipate the viewer to have a certain level of understanding algorithmic price delivery already. If you do not follow this guideline, do not be surprised if you do not understand the basics of everything that I will share. Enjoy this lecture series. Hello there, I hope that you are doing well. Welcome to the 5th lecture of the Predicting Price series. During this lecture, I will be discussing PM profiles. Before we dive into today's lecture, I want to share with you that by the end of this lecture series, you will get access to a full PDF which provides you with a step-by-step guideline which you can follow on a daily basis to determine the daily and session delivery profile. This is not meant as a signal guide or anything along those lines, but it's just going to be a PDF which will provide you with insights on how you can anticipate on your own what is likely going to occur next when it comes to the delivery of price. A key note before we begin with today's lecture is that the time cycle shifts. Our job is to recognize what AMD phase the current cycle is in. That way we can anticipate how the next cycle is likely going to deliver, meaning we need to anticipate where and when distribution will take place. We do that by recognizing manipulation. The manipulation takes place during multiple time cycles, and therefore our job is to recognize when the manipulation is taking place. The PM profiles. First of all, you must ask yourself the question, what are the bigger profiles suggesting PM should do? I have utilized the schematic prior for the London and AM profiles, and I'm just going to utilize it for the PM profiles as well. What I want you to see is that we have this small box right here, which represents the PM session. Around this PM session, you can see bigger boxes. These bigger boxes showcase bigger profiles. These bigger profiles determine how the smaller profile, the smaller cycle, so to say, is likely going to deliver. Meaning, it's all connected. The smaller cycles are connected to the bigger cycles, and the bigger cycles are connected to the smaller cycles. I want you to ask the question to yourself in advance of every PM session, what did the morning session, the AM session do? Did AM reach the drawing liquidity or did it stop in advance of it? This right here is the most important question to ask yourself when you are looking at the afternoon session. And now you understand as well why I shared with you that you should watch the model series in advance of this lecture series, because you need to be able to determine the drawing liquidity. If you're unable to determine the drawing liquidity, this sentence is probably very fake to you, and you need to be able to answer that for yourself. Because the draw on liquidity recognition is the most important in order to anticipate how we're likely going to deliver next. Next that you should ask yourself, where are the AM high and where are the AM low? Meaning, where are the highs and lows of the morning session? PM profiles if bullish. If AM did not reach the daily draw on liquidity on the upside, anticipate PM to draw towards the engineered AM buy side liquidity in advance of the draw on liquidity. This is a continuation profile, meaning AM was bullish, but it stopped in advance of the daily draw on liquidity, and therefore you can anticipate that the PM session is going to continue the AM trend. This is the continuation scenario. Personally, I absolutely love this. Secondly, we can anticipate that if AM repriced lower, but stopped in advance of the daily draw on liquidity on the downside, anticipate PM to change from sell to buy program to end the day, this is a reversal, when the draw on liquidity gets reached on time. Let me repeat that. In this case, you see that the morning session repriced lower, but it stopped in advance of the daily draw on liquidity on the downside. Anticipate PM to change from sell to buy program to end the day, once the draw on liquidity has been met on time. This is the reversal scenario for the PM session. PM profiles if bullish, number 1. The higher time frame institutional order flow is bullish. Anticipate open low for the PM session. You can see that New York opened low and expanded towards the upside. What I want to see is that I have this high annotated, which set up this retracement before the expansion higher, and this high gets displaced through ideally by an imbalance by a bullish fair value gap. That makes this high an imbalanced price range, and therefore we can anticipate that we're likely going to see a repricing into that high, offering sell side before the market is allowed to expand higher. Now, what is very important to understand for this profile is the following. You need to see that the morning session stops in advance of this green line, which represents the drawing liquidity. Now, I can already hear you think, but how can I determine the drawing liquidity? As outlined, watch the model series to understand that, but there are a variety of ways that you can do so. You can utilize higher time frame draws on liquidity, such as imbalances or any other array, or you can utilize bigger time cycles, their highs, or you can utilize the advanced price ranges. There are a lot of ways to come to the conclusion what the drawing liquidity is. But you need to see the market stop in advance of that drawing liquidity. When you then see the market drop into this old high, which got displaced through by this bullish fair value gap, at the right time, anticipate that we're likely going to see continuation higher. What this looks like inside of the fractal is like the following. Where you see PM1, which is the launch cycle between 11:30 a.m. to 1 p.m. consolidate. You see the second PM cycle open low into this red line, which represents this old high. This is our point of interest. And we then see the market begin to expand towards the upside throughout PM2 and PM3, drawing towards the drawing liquidity of first of all the AM high and that drawing liquidity annotated by this green line. Here you can see a chart example of this, where you can see that the AM session expanded towards the upside. Pay attention to this delivery right here, where you can see that AM expands higher. But what you can see is that the launch actually took out the AM high right here. However, the drawing liquidity on the upside was not met yet. What do you anticipate then? That the fact that we take out the morning session high and then drop lower is the engineering of new buy side liquidity. And this is what I mean when I say to you, when I teach you these delivery profiles, you need to allow for some room. Meaning, don't just think that has to be that exact delivery profile or that exact schematic as you see here, where the morning session stops in advance of the drawing liquidity, and then we must see the market run to that right away when the PM session opens. No, because what you see in this example is that the morning session's high forms here. PM opens up at 11:30, and what occurs? We right away, PM2 opens up, we see open low, and what can we anticipate? We take out the launch cycle low, so now logically we can anticipate we need to be able to recognize what the current phase is likely doing. Is it manipulating? Okay, if it's manipulating, wait for the distribution to take place. And that is where we want to position ourselves long if we're anticipating higher prices. You see the market expand towards the upside beautifully, and that is this schematic done. So what you can see here is that even though the overall schematic as outlined within this delivery profile of both New York and PM doesn't perfectly align with this delivery right here, you can see that if you pay attention to the schematic, however, of the PM session, it aligns perfectly. And that is what I want you to understand, guys. You need to be able to utilize these type of schematics for the sessions and pay attention to how the 90-minute cycles are being utilized for accumulation, manipulation, and distribution. The PM profile number 2, if bullish, is again in a scenario in which the AM session expands and the afternoon session continues this expansion. This delivery profile usually takes place on trending days where there's a rush for the market to be repriced towards a specific price level. This right here is a delivery profile in which you need to be very cautious when it comes to micromanaging your position. The reason why is because inside of this delivery profile, there's usually a lot of back and forth going. It's usually a very slow grind towards the upside. This has to do with the fact that every single repricing higher is being followed by repricing lower, followed by repricing higher, and it's all in all just very efficient delivery. Meaning there aren't many imbalances which form and the market is just in a rush to reprice towards that strong liquidity. What you can see here is that the characteristics through this high with a BC, a bullish fair value gap, PM opens up, and during lunch we see the market retrace into that level, and we then see the market begin an expansion. We see it begin a buy program to never return to this level anymore until the drawing liquidity gets met. When the drawing liquidity gets met, we can anticipate potentially some sell side delivery next. However, that right there is something which we need to wait for until PM3. What we can see is that the market just begins to expand, and PM2 just continues that expansion which began during lunch. I am not a fan of this delivery profile because I want to trade based upon purge and reverse. However, if you want to look at continuation models, this is where continuation models excel in. An example of the schematic can cite even more before it formed a high during the morning session, and we then saw a retracement taking place. Notice that when we saw this retracement taking place into this BC, market respected CE perfectly during lunch, and we then saw the market begin a buy program where it continued rising towards the upside. Notice again that when you pay attention to the schematic of the PM cycle, or the PM session I should say, what you can see is that it perfectly aligns with the schematic, where you see open, low, into our point of interest, followed by repricing towards the upside taking place. However, if you pay attention to my schematic drawn here, for both the New York as the afternoon session, you can see that we did not see a continuation profile for the daily delivery, but we did see a continuation profile for the afternoon delivery. Meaning, during the afternoon session, you saw open, low, followed by repricing higher consistently. But notice that this wasn't taking place relative to the daily range, because the daily low and high formed here. This was the daily low, and this was the daily high. So what I'm trying to share with you here, again, is the fact that when you are looking at these schematics and when you are looking at these delivery profiles, you need to understand that they're forming in each other. And our job is to recognize what the daily delivery profile is signaling to us, and then what the session delivery profile is signaling to us within that bigger profile. But we can even take it one step further, where we start beginning paying attention to 30-minute cycle delivery profiles, for example. The PM profiles if bullish, number 3. This PM profile is based upon the idea that AM was bearish, but that New York PM will reverse and draw towards buy side liquidity. What you can see is that during the New York morning session, the market expands towards the downside. Notice, however, that it stopped in advance of our point of interest, right here, this red line. Therefore, we can anticipate that PM will open low. It will open, drop lower, taking out the AM session low, reaching our point of interest, and when that occurs at the right time, we can anticipate a reversal to take place for the market to begin expanding towards the upside. This right here is a scenario which takes place where you can see that there's an obvious point of interest and you see the AM session stop in advance of it. This is a purge and revert. Do we need to see the market draw towards the morning session high which formed right here in order for us to find a profitable trade? No, it can just retrace into the daily range from this low to this high, and then we can target at least equilibrium of that range, which lines up with buy side liquidity engineered above highs. Here we can see a chart example of this PM session profile, where you can see that during the morning session, the market expanded quickly towards the downside. Notice how it was in a rush to reprice lower. This repricing lower continued throughout the beginning of the afternoon session during lunch. When 1 PM then opened up, which is the second PM cycle, we saw the market open low, taking out the lunch cycle low, reaching a key level, and we then saw a reversal taking place from there. And then during the final 90-minute cycle of the day, between 2:30 PM to 4 PM, we saw the market expand quickly towards the upside, drawing towards the lunch cycle high and an old inefficiency, which was right above it right here. The PM profiles if bearish. If AM did not reach the daily drawing liquidity on the downside, anticipate PM to draw towards the engineered AM sell side liquidity in advance of the drawing liquidity. This is the continuation profile, and this is again the profile which I absolutely love for the afternoon session. If AM repriced higher, but stopped in advance of the daily drawing liquidity on the upside, anticipate PM to change from buy to sell program to end the day. This is the reversal. When the drawing liquidity gets reached on time. The PM profiles if bearish number 1. What you can see here is that during New York, we open high and we then see an expansion towards the downside taking place. Notice that the market continues to expand towards the downside and eventually it forms a low in advance of the drawing liquidity above this red line. This is the engineering of sell-side liquidity which is taking place. What we are now anticipating is that a retracement will take place into this old low of an imbalanced price range, which got displaced through by a CB, and we want to see the market form a high there before continuing lower. What we can see then is that during lunch the market consolidates, 1 p.m. comes along, and we see open high right here in this schematic, open high. You might be wondering, but we first drop lower, right? Yes, but relative to the full cycle, we first go higher before dropping lower. And that is why it's so important to understand the narrative. I got some questions about what open high and open low exactly means. Notice that I'm referring to a specific time cycle opening, going higher into our point of interest, into this black line, look on the left right here, before the market is allowed to draw towards the downside. We take out the launch cycle high, we take out engineered buy-side liquidity, we manipulate higher to then distribute towards the downside, drawing towards the drawing liquidity and the AM low which has been engineered in advance of it. If you are managing your position, it's never a bad idea to take partials below the AM low. An example of the schematic can be seen here, where you can see that throughout the morning session, the market initially ran up higher, formed this low, which set up this run higher, formed this high, and then we see this repricing lower taking place. Notice that the market expands quickly lower. We then see the market consolidate throughout the lunch, throughout the latter part of lunch, I should say. And we then see a retracement taking place. The market retraces into this old low, and this retracement sets up the next leg lower. But let us pay close attention to the delivery. What I want you to see again is that instead of the New York morning session, its respective low being the absolute low before continuation lower taking place, I want you to see that we first take out the low, form a new low, then reprice higher, taking out the launch cycle high, reaching this old low, which is a bearish breaker, where you see a high, low, higher high, lower low. And then we form the high before real continuation can take place during the earnings post-market. Let me repeat that. We first take out the morning session low during lunch, form a new low. We then take out the launch cycle high, reach a point of interest before eventually expanding towards the newly created launch cycle low. If you pay attention to the schematic, you can see that PM2 took out the PM1 high, the launch cycle high, and then begins a reversal drawing towards the sell-side liquidity resting below PM1 low. The second PM profile, if bearish, takes place when the market is in a rush to reprice towards the downside. The only difference between this schematic and the previous schematic is the following, where you can see that this schematic, the PM2 high doesn't form above the PM1 high. In the previous schematic, you saw the PM2 high form above the PM1 high, which is the launch cycle high. But in this case, a lower high forms. And that is showcasing to you that there's an urgency for the market to be repriced to lower. An example of this schematic can be seen here, where you can see that initially we saw the market expand towards the upside during the beginning of the morning session. We form a high, and then you see this big downcoast candle right here, creating a CB. We see the market displace through this low, and we can see that consolidation is taking place near the other part of the morning session. This consolidation has one function, and that is to engineer sell-side liquidity below these relative weak lows. We can see that the market begins to retrace, and it retraces into this large CB, into this old low during the launch cycle. We form a high, and notice that the market never takes out this high before expanding towards the downside, drawing towards the real objective. This is a beautiful PM session profile where there's a rush for the market to be repriced towards the downside. The third PM profile, if bearish, is a PM profile in which you can see that New York initially opens lows, then begins to reprice higher, and then consolidation is taking place. Notice that this consolidation is taking place throughout the latter part of the morning session and throughout the launch cycle. Now, what is very important to understand is that for this delivery profile, you need to see that the launch cycle stops in advance of the point of interest, in advance of this green line. What this means is that we can anticipate a run above those highs and price reaching that point of interest before it's allowed to turn around and before a lower time frame sell program presents itself. And a thought just crossed my mind whilst speaking about this part right here in the lecture, which is very important for you to understand. And I'm going to share this now because if you're still watching this lecture, this is not the first lecture, it's not the second lecture, no, this is already fifth lecture of this series. If you're still watching it now, yes, I want you to understand that everything which I teach to you on these smaller fractals when it comes to the algorithmic signatures is a result of these bigger delivery profiles confirming that we are likely going to see that repricing taking place like we anticipated to take place. Therefore, you need to understand daily delivery profiles. You need to understand session delivery profiles. So I hope that you're taking proper notes, and I want to basically congratulate you on your persistent work. That's very good to see, and I hope that you're enjoying this lecture series so far. But anyhow, back to the lecture. That's the first time I let something off topic come out in this lecture series. What we see is that PM2, again, opens higher into the point of interest. And from that point of interest, we can see a sell program taking place. Why? Because we are anticipating that the PM profile will reprice towards the downside. We are anticipating that we are likely going to see repricing lower taking place. An example of the schematic can be seen here, where you can see that the market initially runs higher throughout the morning session, and throughout the later part of the morning session, a consolidation begins. Launch continues this consolidation, and notice relatively equal highs are being created. The PM session, its respective second cycle opens up, and we reprice higher, taking out these relatively equal highs before we see a quick expansion towards the downside and before the market expands towards sell-side liquidity, resting below all of these lows. If you can position yourself short inside of this area, that is a beautiful short setup. When to be cautious during PM? If AM consolidates, be very cautious during PM. Meaning, if the full AM session is consolidating, be cautious with looking at the PM session. Because I hope that you're beginning to see that for the PM session, it's very important that you understand what the daily drawing liquidity is and how we are trading around that. If AM is not doing anything, that means that time distortion is in play, and that might continue throughout the afternoon session. Secondly, if PM shows no one-sided order flow between 1:30 PM and 2:30 PM. If that is the case, be very cautious with looking at the remaining 90-minute cycles of the afternoon session. Thirdly, if there are earnings post-market, such as Meta earnings, Tesla earnings, Amazon earnings, etc. When there are earnings post-market of big companies, you can anticipate that they're likely going to chop around in advance of them to engineer liquidity. Just like any other high-impact news driver gets basically put in that consolidation profile before the release of the news. So with that being said, this lecture comes to an end. I hope that you found it insightful, and I hope that you were able to learn a lot about the PM session profiles. The next lecture will be on trade breakdowns based upon trades which I've taken in the past, in which I'm going to explain to you how we can utilize anticipated delivery profiles paired with the lower time frame fractals as I've taught them to you when it comes to algorithmic signatures. I want to thank you for watching this lecture all the way to the end, and I wish you all the best, and I look forward to catching up to you in the next one. Be safe.